And now to other financial institutions' H1 earnings. We're doing a comparative analysis of their performance. We'll start with the earnings, and the companies we're looking at are United Capital, Africa Prudential, NGX Group, and Custodian Investment. So we start with 2022 H1 for United Capital, 9.11 billion naira. And in 2021, 6.85 billion naira. And then the percentage change there, 32.93. That's the percentage change, 32.93. To Africa Prudential now, 1.99 billion naira, 2022, 2021, 1.67 billion naira. The change, 19.29%. For NGX Group, 3.82 billion naira, 2021, 1.59 billion naira. Percentage change, 140.43. Custodian Investment, 48.50 billion naira, 2021, 42.19 billion naira, percentage change, 14.96. Well, let's begin with you, Mr. Fakruha.
Yes, looking at the earnings, I am not really surprised because, like we have said here on this platform, you know, just coming out of a COVID year and you see improvement in activities, production, and most of these financial institutions, well, while the COVID was on, some of them were still operating because before that time, some already started their remote transactions, online businesses and all that. But like if I take an example and I look at the NGS Group, you know, I really commended them as at that time. That was the year 2020, specifically in March. You will see that they showed leadership through the regulators. They were able to call brokers, that is traders now, and say, bring your laptop. They fomented it so that you could trade wherever you are, not even your office in terms of remote. They said it was VPN, virtual private network, and all of us benefited from it, and transactions were still going on. They are the thick of that COVID. So you could see that investors could still send their mandate to their stockbrokers. They could still, the compliance officer can still confirm, and of course, transactions were going on. That was really unprecedented because transactions were still going on. They were still, in fact, it was at that 2020, if I remember specifically, November 12 or so, that the all share index went up on that particular day over 6%. They had to trigger the circuit breaker, you know, because the prices were just going up. So and they needed to just say, hey, brokers, calm down. Let's review this market and see what is going on. So you could see all those activities. This is what we are now seeing in terms of their earnings. Again, but before we conclude, I'll say, well, some of these companies, they are not in different areas in the financial sector. United Capital is basically an investment banking firm, asset management, trusteeship, and the rest of them. Africa Prudential, yes, that is the original registrar. You know, I would say it's a former UBA registrar. But now they are not only doing registrar service, they're also doing investors relation. They're also doing business support system because they know right now the registrar service cannot support them really. So they are really thinking outside the box. I'm sure that's why we are seeing some of these their figures. Then of course the NGS Group, which is what every broker have seen that yes, their earnings over 140%. So if you can earn so much, so what is happening? That you are coming to the market to raise additional funds. Well, that will be led for the board of directors of the NGS Group and of course their professionals. Yes, for custodian investment, yes, they are, I'll say it's one-stop financial company, one-stop shop financial supermarket. Yes, they are into insurance, they are into investment, and of course, with the caliber of people there now, we are seeing. However, looking at their earnings, I think they are just started, and we believe that that company has a lot of potential.
All right, thank you. Just in 30 seconds before we move on to profit after tax.
No, I'll tell you that when you see top line of any company, whether you are in service, you are in the manufacturing, you are in the banking sector, top line will tell you, yeah, this company are expanding their business, and if they are going to new business, it will reflect on their number. If they are eating into a new market, it will reflect on their number. No, luckily for them, all of them will grow their top line. It's a good one, but most important to me, another is the the bottom line. They want to look at what, and after making this turnover, what is the in for us as investors, because we want to look at after we have deducted your taxes, your expenses, because we know that with the rising inflation and oil and there. Most of them, let's see at the bottom line what is left for us. That is where we can smile and say, yes, kudos. But it's good that the top line are in green. Let's also look down to see, he has just said it all. These are companies that are in a service in the financial sector with different business in that same financial environment, financial market. For me, it's a good one. And don't forget also that our capital market for the first half of the year was in green. Seeing stock like UCAP giving out that number, Africa Prudential, even the regulator bringing that kind of number, self-regulator bringing that number, it's also impressive. Go back to Custodian Ally has kind of let me call it another hood code on his own.
Exactly. That's true.
All right, well, let's look at the profit after tax now. We'll start with United Capital, 4.44 billion naira. And then in 2021, 3.14 billion naira. Percentage change, 41.19. For Africa Prudential, 935.78 million naira 2022 H1. And then 2021 H1, 827.64 million naira. The percentage change there, 13.07. For NGX Group, 820.17 million naira. And in 2021, 449.66 million naira. And then when you look at the percentage change there, 82.40. For Custodian Investment, 4.72 billion naira. In 2021, 4.63 billion naira. The percentage change, 1.92. Mr. Garba, let's have your thought.
Yeah.
Mr. Garba, if you can hear me, I would like to have your thought on the profit after tax. All right, Mr. Ambrose.
Yes, I just said, looking at the bottom line of this company, they are really impressive, and also it's an indication where they are going at the end of the current financial year. And most of them have December as year end. As at Q2 or half year, we are seeing this impressive number, especially from from UCAP. It shows that this company is well run. And for me, you can see other indicators or other numbers, saying that it's pointing to some value in that company. We also can see that African Prudential, as my colleague have just said here, trying to come up, knowing that they started the same race, with UCAP at the same time they were released. But you can see the gap between UCAP and you can see which, even in price and all. I think also they should also buckle up and come. But at the price they are selling compared to their payout, it's also commendable for those that are income investors. For NGS, yes, I think this is where most investors and the public are questioning why are they coming to the market. Seeing this kind of improvement compared to what they've seen, a kind of bad performance in their financial year ended 2021. There's no dividend, flat number, but in current year, both Q1 and Q2 are looking up gradually. If it is sustained, I think for me that's why I said they are quick coming to ask for funds. They are waited to the end of the year or the second year before you come approach the market. And also like what they said in that what you read, that they agreed on a thing, and now they are saying that they have an issue share that is outstanding. That also they think and do. But I believe that their number is looking up. That also they should sustain it. And like I said before, that their money now if you look at any day an exchange open door, whether you are trading remotely or trading physical, money is entering their book. And also they are into some business again related. For me, I believe that they should run it well and see how this thing is well managed. If you go back, as we are going now, still look at their their profit margin, you can see that the expenses we saw they made in that 2021 is already reflecting in this current year, because it's also showing on their profit margin. But others in that same industry can see the difference between their profit margin. Yes. I believe that they also work on it. But if you look at Custodian Ally, this is a company that
But now that you've talked about NGX, aren't you concerned about the management? Aren't they saying these things?
Like I will tell you that when you are the one inside, you always find work defending yourself in what you are doing.
You should know
you defend yourself. It is the one, like my mother will tell me that it is someone that looking at that will tell you how well dressed you are. You might think you are looking too beautiful. There is a place that you are not okay. People outside are seeing that they feel that all they are doing that. That's why they can come out and tell you that they have followed all the corporate governance. There's still something that need to be dotted and they're not seeing all those things, or they might see that kind of doesn't matter, but to the public it matters. That's why their consultant, as it just said, should also advise them properly, because you are dealing now. Also there's a conflict. That's why this is happening. Other markets that are listed now, where you list your, because you are in your own, where you are regulating, you are there, need to set the pace. Let's see that corporate governance open. But if you are checking me as a listed company, you should also look at yourself first. That's why I say all eyes on them. Why when they're on OTC, they were not looking at them as the way they are watching them now, because you left OTC to the real market to find who agree. But now keep to the standard, because if you are the regulator, let's show leadership in that. But I believe that their numbers is improving. Let them to do well. But I believe that also Custodian Ally, I see value in that company. I see pro value in that for investors that are thinking for consistent dividend payment, because the era we are now, because of rising inflation, you need to look at where can you edge against what inflation. Which company consistent can give you, even though we are not making too much capital appreciation, that we are closer to the inflation. But I see that companies in this sector, especially I can see two of them that are consistent, that you can kind of value in terms of performance. I believe that investors should also look at it, because these numbers are really looking good.
All right, for earnings per share, United Capital.
Let me just mention just to
in 30 seconds.
Debunk something.
Debunk.
Yes,
all right.
Okay, we would not really to debunk, just to confirm what they have said. You see, traders will trade everywhere. And like I said, if I just put in my buy or sell and I say enter, NGS has
made money.
They've made money. That is obvious.
Yeah, he said that. Yes. It's a money spinning.
Yes, agreed. Yeah, that's what I'm saying, just to confirm. But at the same time, we need to also understand some of their peculiar challenges. The technology they deploy there, yes, it's also a problem to them. The technology is so sophisticated, and everybody's remote. I know even training young brokers, we had problem in terms of letting them get to the training production platform. So we as members or as trading license holders, we are there to support the NGS, and when something is going wrong, like he said, we will tell them. And
so have you told them about this?
Of course, that is why these issues are coming out, because people have started speaking. There is no intention to bring down the management of the NGS group.
Well, nobody's doing that.
Of course, so everybody is ensuring that, because this is our own. I want to ensure that, like he said, the highest standard of corporate governance is adhered to, because they are the pay setter. But again, I want to also confirm, I want to clarify something. Okay. Yes, the NGS group, yes, but the trading outfit of it is a different company from the regulation. So you have the NGS exchange as the exchange limited. They also have the NGS regulation, which is the NGS reg. So, and there is a Chinese wall between the two of them. Whether they are in a group, there is a Chinese wall. So the NGS regulation has its own board and management. So if the trading arm of the business is not doing well, they have the right to sanction them. So all these things have been taken care of before the demutualization. And I believe with the caliber of persons there, yes, there'll be one or two issues here and there, but we as trading license holders, who are the original owners, but now we have made it open to everybody. We want it to continue. It's a legacy.
I don't want us to continue. I don't want us to continue with this.
Thank you.
Okay. So very quickly, earnings per share for United Capital 74 kobo, for Africa Prudential 47 kobo, for NGX Group 41 kobo, and then for Custodian Investment 80 kobo, and then we have the interim dividend of 10 kobo. And from there, we'll quickly move on to the PE ratio. We take the two together. United Capital 17.11, Prudential, that's Africa Prudential, 12.08, for NGX Group 50.75, for Custodian Investment 8.10. You were laughing when I said 50.75.
Exactly.
Don't slide.
Emotion to it.
You don't have emotion.
It just give you point where you are going, whether you are in the wrong direction or you should know with the numbers you are seeing.
Exactly.
Looking at the P ratio, let's start from P ratio. When you relate your price to what your earnings, that will give you your P ratio. Yeah. Looking at the P ratio you are seeing now, you can see that Custodian Ally is standing out to say that the stock has a good earnings compared to what their price. Their price is lower, around below 7 naira, but what earnings about 80 kobo. You can see that you have a low P ratio. That means you have shorter time to recoup your investment. That is a simple way to put EPS. But look at the earnings that's coming from them. 80 kobo at the end of the year, you can forecast from this point that we can see 180 kobo or 160 minimum from them, and we also expect a higher payout at the end of the day. They're giving us 10 kobo already for a half year, and I expect like 50 kobo again or 55 kobo from them. That is a good one. But you can look at what happened in NGS. NGS is giving about 50 points. Do you know what it means? if we're looking at this, if you look at this number,
50.
How many years?
if you are looking at this number, there's no improvement. Even at this point, you can see. And also, I know that P ratio is not enough to kind of evaluate, but it gives you an insight that before you go do your mathematics or bringing the other dividend. Discount. And for this company, there's no dividend discounting model to apply because they've not paid dividend. They won't be sharing money before because they are run a form of government. For me, you can see it's always telling you that you need to be very careful. Even though at this price, it tells you that the price they are selling is still high to what they are showing out as number. That's why investors will rethink. That's why people like me, I won't buy to NGS at this price, at 18 naira. I'm looking at if you can go as low as below 15 naira before you can think buying it, because that way you can look at the P ratio for Africa Prudent, for UCAP. You can see a well-run company. Yes, you can see the dividend history of this company. If you looking at the P ratio alone, look at also another model, you can see that company is well valued at the price it is. For me, it's a good one. These numbers are really telling us opportunity in this sector. But as investor, we look at leaders in any sector where so that you can also play safe. That's why in my last class I did about different types of classes.
On that class. Well, very quickly, we'll close by just mentioning the book value per share and the profits margin. So for the book value per share, United Capital, 4 naira 42 kobo, while the share price is 11 naira 20 kobo. That's at yesterday. For Africa Prudential, 4 naira 35 kobo. Share price as at yesterday, 5 naira 55 kobo. And then NGX Group, 19 naira 57 kobo. That's the book value per share, while it's closed at 17 naira. And then for Custodian Investment, 11 naira 29 kobo. Well, that's what we have there. So, very quickly, in less than 30 seconds.
No,
he has another 30 seconds.
I'll just say that book value does give you an insight to see whether there's a discount in the market, comparing the market price. But you can see that there's a good margin of safety looking at the difference between the market price and the real value. What is that if this company is eventually kind of liquidated or kind of being in the process, this is what you get after taking care of all the debts, even the bond they are saying. For me, it's a good one for them, but you give an insight, the value that you are saying, let's say the margin of safety is high, even if you are buying this price. I mean, for me, it's a good one for investors to look at. Look at what is happening also in that custodian. The market price is around below 7 naira, and the book value, book value is about, so that means almost about 100% discount from the real value. It shows that investors should look that way. Look at also UCAP, consider yes.
But we have to end it. We have to end it now. In 30 seconds, we need to go.
I would say I did my usual checkup, and I discovered that most of all these financial services servicing companies, yes, they've impressed me in terms of their consideration for the environment and for
okay, thank you so much, and many thanks to our guests that joined us virtually. Mr. Gary Bakrufi, thanks for joining us, and also we had Mrs. Nkoli Edoka. Many thanks to her for joining us. Thanks for joining us, Mr. Charles Parkroha.
It's always my pleasure.
Thanks for joining us, Mr. Ambrose Omodion.
Thank you for having me.
All right, thanks for joining us today. My name is Perpetua Fasami Peter. Do enjoy the rest of the day. Bye for now. Happy weekend.